I wouldn't say I'm that optimistic like some of the others. I think I'm, more as in some areas rather negative, in some areas positive. That's why I clearly said be opportunistic, be selective on the private market side.
Private markets, I know it's very generalistic question about the private markets, but would you say private markets in the future are more like a smaller investment niche, or do we see a golden future of the private markets?
In between. Yeah. So
it depends.
No. I do believe that we will see growth in private markets, definitely. But it's probably not going to be a one-way street. There will be setbacks as well. There will be, or obviously here and there, providers which will not fulfill their the return expectations. That will happen. What is important is obviously that we do select the right products for our clients, absolutely, and we will have to do more of education, at least on the private client side, and bring forward new products in different areas with attractive risk return profiles. And you talked about democratization. Fair enough. I think you could say that. I do believe that actually we will give our clients access to interesting assets, interesting risk return profiles. That's our job. That's what we have to do. And we need to ensure that we do it from a strategic asset allocation perspective for individual clients in the right way, in the right dose. That's our job as well. And therefore, I'm actually quite constructive that these markets will grow.
Well, it will surprise you. I see a golden future. I think there's much work to be done. First of all, education, as we discussed before, for the private markets. But still a massive need for investments on the infrastructure side. A lot to do on the regulatory side for the private clients, but also for the institutional clients, as discussed before. A lot of room to invest, but also on the infrastructure side, we have to be faster, that investments can be done to solve those massive needs. So from my side, yes, a golden future, but always keep in mind returns come with risk. So proper due diligence is needed for the private markets, and with that, I see a really good future.
And performance of the past is no indicator for performance of the future.
Yes, but with a good due diligence, performance will be good.
Yeah, I'm also very optimistic for the future of private markets. I think we will create some tailwind via a strategic approach. We should not go for a product push because it's a fancy idea we can offer to clients. It is really about creating a strategic asset allocation, including private markets, that is then connected to the financial goals of a client whenever he will retire, or his son or daughter will go to New York for studying or whatsoever. I think if we integrate private markets in that advisory approach, then it will have really a very good future. And as already mentioned by my colleagues here on the left, selection is key. Selection for the right partners and the right clients.
Yeah, I would dare to say that we will see big numbers, but it's due to the fact that, global economy, if you think about global growth, we're talking about 2 to 3% growth every year. And you add to that 2 to 3% inflation. So maybe we're talking about 5 to 6% growth per annum. And that's true for public markets and private markets, I would expect. So, there will be years where then public market growth is stronger, and other years where then private markets will catch up. And what is important in our view is to at least try to build a portfolio that is close to complete, right? Because I think if you just focus on bonds and stocks, that's fine. But let's say any investment universe is incomplete. So you're leaving out other sources of risk, which maybe it's not very intuitive, but we like to take consciously as many diverse sets of risks, because then we actually can have a higher expected return and hopefully a more stable return as well. So I think that's what would be nice to have, right? It's complicated to build that, but yeah.
Yeah, I think private markets belong to an asset allocation. Actually, it's good that they belong to an asset allocation, because that's also something which gives us components which we can model on. Otherwise, we would be all replaced by a 60/40 Vanguard ETF, which would not be a good idea for CIOs. But having said that, it's a market which will grow, but I think it will also adjust going forward due to the new interest rate environment. And as I said before, you have to be quite selective. You have to be opportunistic. But in general, a harmonization of regulation will obviously help also private markets going forward. So yeah, I wouldn't say I'm that optimistic like some of the others. I think I'm more as in some areas rather negative, in some areas positive. That's why I clearly said be opportunistic, be selective on the private market side.
Surprisingly, I'll be extremely optimistic, but for a number of reasons. I think the first one is we were a bit on steroids with QE, and I think we're on much firmer and healthier grounds now. And that's very important. I mentioned the tourism in private markets, and I think, this is not actually creating a stable environment. And I think with more perennial demand from investors, I think that creates a more stable ecosystem, and that's better for all.